Hello everyone and welcome to your Glassnode video report for week 9, 2022. Now this week we're going to explore things from a slightly different angle to what you've seen in the past, and we're going to step through the URPD metric, which is the distribution of supply, and we're going to look at 4 particular data points and try and understand the difference in behavior between May last year and the current drawdown, both of which were 50% drawdowns, but we have very different hodler behavior, and we're really going to explore this. And we're going to really identify how all-time high buyers, the people who purchased in October and November, have essentially been flushed out. They have capitulated. But this is very different to what we're seeing from the HODLer class. So we're going to look at that divergence between these two cohorts of Bitcoin investors. So we've spoken in previous videos about how we look at on-chain analytics as a gauge for sentiment. And we typically see 2 different cohorts of actors in broad scale. Sometimes we call them the short-term and the long-term holders. Sometimes we call them the strong hands and the weak hands. But generally speaking, what we see is that there is a class of people that we call HODLers or long-term holders, the buyers of last resort, who stick around through rain, hail, or shine. And they're essentially here because they believe in Bitcoin in the long term. There's then also a cohort of people who come sometimes just for the price action, for the hype, because they heard about it on the news. Some of those folks stick around and do become hodlers and they go down the rabbit hole. Others come purely for the price, and then others go and speculate into other coins. So what we really look at with on-chain analytics is how do these 2 different cohorts of traders, investors, and people in the market, how are they behaving? So obviously at the moment, there's a lot going on in the geopolitical and the macro environment. So do be very cautious with everything at the moment because risks and uncertainties are absolutely everywhere. However, even with that backdrop, which is extremely uncertain and full of risk and full of unknowns, we are seeing a very, very consistent behavior from the hodler cohort, and it definitely differs from the hype investor cohort. So we're going to really look at that divergence. We're going to explore it through a number of different models and methods and try and just paint a picture about what these 2 groups of investors are doing and what it paints in terms of Bitcoin in the road ahead. So let's get started with the analysis. Now, just a reminder before we get started, please do give us a subscribe and a share on our channel. It really helps us a lot. Get more of this content into different eyeballs and more people kind of seeing how we can use these tools and use on-chain analytics to really explore the realities of what's going on. So we do really appreciate it. And as you can see, Team Dark Mode wins for this round as well. So what we've seen is the market really kind of get some positive price action. At the time of recording, we're testing the 41,000 level. So we are starting to see a bit of a reversal. Now, whether this is a longer term trend change, whether it's just another green candle in this bear flag, it really does remain to be seen. And let me just preface this whole video. This is a very uncertain time. It is extremely challenging to analyze and fully understand what's going on in the world at the moment. No one has the answer. What we're looking at here is the different cohorts of investors. We're trying to distill it down to the information that we do and we don't know using on-chain analytics. So we're going to start with a bit of a story, and we're going to look at 2 different phases. And I've got here what I'm calling the URPD sequence. We're going to look at 4 different versions of these charts, which shows the distribution of supply. Some of you may have used a volume profile before. It's where volume is moved on chain and the different price nodes at which that has occurred. Now we're going to look at 4 different charts in 2 different locations. The first one is our May top, and followed into our July bottom. So this 71-day period where we saw a more than 51% correction. And really we're going to explore what the hodler behavior and what the investor behavior looked like over the course of this time. What did all the people who bought this top do as we sold down over 50%? We're then going to follow up with the second 2 charts, which is more or less the same scale in terms of a more than 50% drawdown overall. But we're going to see how the difference in hodler behavior acted over this 138 days. So this has been almost twice as long as this previous correction, similar in magnitude, but we're going to explore the changes in investor behavior and try and establish what that tells us about the sentiment and who is left in the market. Now, just as before we go into this, remember that last video we talked about how many of those hodlers are the only people left in this space. We've seen on-chain activity collapse, and really it collapsed following this May sell-off. We talked about this in the bear market survival guide that we released on Friday, and do be tuned in this Friday for the second part of that series. So we have really seen only hodlers that remained from really this July period onwards. So it kind of sets the preface for what we're looking at the moment. So with our first phase, this is looking at the May through to July correction last year. So what we can see here is the general shape of this supply was very, very what I call top heavy. We had lots of investors that bought above 54 and between 60K. All of these investors were essentially bought into the narrative that we were going to 100,000. And we can see here that there's a lot of supply up the top here, a little bit of supply down to 46K, and then really a fairly thin node in the 30 to 40K range. Obviously, we have all of our Bitcoin pre-history back here, but that's less of our concern. That doesn't change a great deal. We're really looking at this recently moved supply, which is the most likely to then be respent. So there's lots of short-term holders up here during this time period. Now, after we had our 50% sell-off and 2.5 months of some pretty seriously nasty price action, see this blue area? These are coins, so you can still see this blue chart here. This is mapping this exact same distribution onto this price distribution after that 2.5 month period. And we can see that many of these blue coins, particularly in the higher price bands, were redistributed and filled out that 30 to 40K range. So this is describing people who bought the top, selling a great number of their coins, and somebody else had to step in between 29,000 and 41,000 to really consume that supply. So we saw this transition of top buyers selling down, and this really was quite a dramatic sell-off. We saw lots of people who bought the top exiting their positions, taking whatever liquidity was offered, and essentially just getting out. So this really describes that redistribution of supply from those weaker hands who bought the top to those stronger hands who are willing to step in, even though price action was pretty scary down there at 29,000. So now if we zoom into our current price period, now this chart on the left here is what we had in November at the all-time high. Now let's just compare this distribution to the one we had before, which was very, very top heavy with not much support down here in the 30, 40,000s. Now you can see this is a very even distribution. So remember, we had the rally from this July low. We had the rally up in August, a sell-off in September, a new low got put in at 40,000, and then we pushed up to the October, November all-time highs. And you can see that we had a very even distribution of supply through that period of time. Now, you can see that we have a similar node down here, although it's a bit fuller in the 30,000s. And remember, this was a very large node in July. So a lot of these coins were then redistributed up to these higher levels, which ultimately is why we had a top put in. People who bought the lows then swung trade and actually sold their coins on the way up. But note as we move into our current period, so again, this is after a 50% correction, similar scale and twice as long. So again, every investor in Bitcoin is very aware that we're down more than 50% from the all-time high. It's not a surprise to anybody. And we can see the blue curve, see how it more or less still matches for a great part of the red curve, which is our current curve. What this is showing that there's still, even after a 50% correction, a great number of those investors, particularly in the 40,000s and the 50,000s, appear relatively unmoved. They don't seem to be fazed by this current correction. And given the fact that we know that many of the tourists, the people who came for the hype, got flushed out in May, really it's a hodler's market. So even though we have this even distribution, a lot of the buyers of this are more than likely to be hodlers. So we're actually seeing a market that's driven by people who are ideologically aligned with Bitcoin. They don't particularly mind what the price is. They're less price sensitive. They're more likely to be here for the very long term because they believe in Bitcoin and what it is. So the zones where we have seen distribution is literally the all-time high buyers, people in the 60,000 plus range. Whereas here we saw a fairly wide distribution, came down to around 55, 53,000. Here, it's very, very discreetly only top buyers who have redistributed. And we can see that we've got a similar type of redistribution, but still overall supply is held throughout this entire curve. Now, there's two interpretations of this. Perhaps these are in fact people who are still underwater and just waiting for exit liquidity. So this could still become sell side pressure. But what is observable is it's not as aggressive as a shift as we saw in the previous correction. This is a lot more controlled. It looks like people who are currently underwater are more willing to hang on to their coins than what we saw back here in May, June, July. So it's showing that more than likely there is a hodler base here. Most of the investors in Bitcoin right now are longer term investors. And that really paints a picture that we probably have a stronger cohort than we had back in May, June, July. It doesn't mean the risks don't exist, but it certainly says that of the market participants who are still here, they're more likely to be of a higher conviction and a higher resolve. And we've seen this in many of our supply dynamics, like our 1 year supply, our long-term holder supply. There's confluence across a number of things, but this is really showing how we really had the top buyers being flushed out, and most of the others are fairly happy to just sit tight. So that's kind of painting the picture of the investors who remain in Bitcoin. So now on top of that, we've obviously seen a great deal of fairly uncertain news. I mean, we've seen kinetic conflict breaking out in Ukraine. This is the first time we've seen something like this in quite some time. So it really is a shake-up to the world, and it does remain to be seen how this plays out. Now, when we think about in terms of catalysts, right, we still have a lot of those investors who are underwater. We spoke about this in our bear market survival guide and in the week on chain last week. There's a lot of investors who are still underwater right now. So you would think that when something like that breaks out, some very significant piece of news, you would expect almost a final flush out. It's the catalyst to make anybody who is even remotely uncertain of their position to completely exit. So if that was the case, we would expect our net realized profit and loss to have one of these large scale capitulation events, these very, very big red candles, more than $2 billion liquidated. But note here how we had 700 million, which is actually relatively small in the grand scheme of things. We look here, we've had in our May, June, July, we had 2 major capitulations, and then a very small one here at 29,000 in July, right at the end. And that was almost the last final flush out of whoever was just left in the sell side before we actually had a very, very significant period of price appreciation. So it was, even though we traded down to 29K on the exchanges, we didn't see a mass flush out of people losing conviction. It's almost like the bears didn't have enough grit to push it lower. Now note that we've had 2 major capitulation events, almost exactly the same as what we had back here in May, June, July. And we similarly had a small capitulation as we sold down last week. Now remember, this doesn't mean that we're due for some major bull market. We still have to keep the macro context in our view. However, there are similarities here. We didn't see the kind of major capitulation and loss of confidence that we would expect. Doesn't mean it's not going to happen, but we haven't yet seen it. So that's just a piece of information we can take with us. Now, we also have here the number of transfers to exchanges. These are deposits. This is not coin volume. This is the number of people depositing. So just a count of how many people are depositing coins. And in the blue, we have the number of people who are withdrawing coins. Now, note that the number of deposits to exchanges is higher. There are more people depositing. However, note how it's declining in a very, very structural form pretty much since December. Even though price has corrected significantly, we've seen a very, very large decline in our number of deposits. So people are less willing to deposit coins as price corrects. Now, our transfers out of exchanges, our withdrawals, note that through that same period of time, it's more or less trading sideways. And again, let's think about what this means in terms of our market participants. We've established that it's most likely that only the hodlers remain. So this sideways action in terms of withdrawals almost speaks to the fact that we have the same people who are dollar cost averaging, for want of a better term. There are the same people who are willing to stick around and withdraw and buy Bitcoin, rain, hail, or shine. So it's really telling us that there's this consistent and persistent base of hodlers. Now, simultaneously, people who are willing to sell their coins are in decline. So again, it's starting to speak to perhaps very early signs that we've got a turning of the tide. Maybe things are starting to actually get into what we call a value zone. And hodlers who believe that there is value here are more than willing to actually step in throughout all of this volatility. So it's showing this divergence between the shorter term top buyers and those longer term hodler class. Now, to kind of add further fuel to that, if we look at our revived supply, so this is the volume of coins older than 1 year. Again, let's think about this in context. If our long-term holders have held their coins for 1 year, which by the way, a year ago in February, we were actually up here near the top. So a lot of these 1-year-old coins are in fact held at a loss. So this is quite a significant thing to observe. You would expect when we get a capitulation event and maximum fear comes in, that this would start to tick higher. Now note that this large spike here recently, this was the Bitfinex hack. So just keep that in mind. This is actually an anomaly, this particular candle. But even so, we would expect something like a very, very large uptick if there was a widespread loss of conviction. See here as we were rallying up into the October and November highs, we had elevated levels of revived supply. Right now, it's ticked up a little bit, But it's similar to what we had back here in the pre-bull phase in 2020, which I would consider almost like a base load. There's always coins coming back into circulation, even older ones. And this is not really screaming higher. Now, remember, if this started to really scream higher, that would be a sign of loss of conviction. But we haven't yet seen it. The same way that we haven't yet seen a major capitulation and a loss of overall confidence. And in our net transfer volume 2 exchanges, this is the number of coins that are actually flowing in and out. I've got a 14-day EMA here. I use EMAs when I care about more recent data, but I also want to smooth out the noise because it will more heavily weight what happened yesterday and the day before. And 2 weeks ago has the lowest weight. So it kind of puts more emphasis on what's going on in more recent times. You can see we've had a very, very slight uptick, 800 BTC per day. But remember, this is nothing like what we saw in May, June, July. We still haven't seen that loss of conviction where coins come flooding back into the system. The hodlers remain very, very consistent. They seem to be buying irrespective of price. Now that means that they're being matched because we've seen downside price action. Price has to correct until it meets those hodlers at their floor price. So people will keep selling and the market will keep adjusting until that balance between supply and demand is reached. And what it's showing is that since we've traded sideways for around a month now, we're seeing that kind of matching of that supply and demand. And really, it depends on where we go from here. Do we see that hodler momentum push it higher? Is there enough demand to actually push us higher? Is that going to attract more retail and hype? Or are we actually going to see that there's still not enough demand and we have to pull back? This is some of the evidence we're trying to compose that story. But what we are seeing is that hodlers almost remain at their base load of very consistent accumulation. Now, talking about the top buyers and people who are flushed out, we saw that in the URPD metric. There was a flushing out of people who essentially bought in the 60,000 upwards range. They've more or less been completely flushed out. Now, this is an unreleased metric from our Glassnode engine room. What it's showing is the profit and loss, so you can see here, broken down by different ages. So the hotter colors, the pinks, are very, very young coins. We typically see these 24-hour and these 1-week-old coins. They're constantly on the move. And typically because they were recently purchased, they're not really realizing a large amount of profit. Now, conversely, see these large green spikes? These are very old coins held for 2 or 3 years, realizing enormous profits. So when we're in the positive here, this is saying 4% of Bitcoin's market cap in terms of profit was realized on that day alone. So you can see this was a very, very large amount of profit taken at the top of the 2019 rally. We saw a large amount of profit taken on the rally higher in 2021 in January. And we can also see that we get these large capitulations. And note here, the November 2018 capitulation at the very end of the bear market. Note how it lit up a great number of these older coins down to the 1 years and the 2 years. Even here during the March 2020, we got these green colors. These are 2-year-old coins that got flushed out at the lows. This is what a major capitulation event looks like. We get basically everybody believes that Bitcoin is going to zero and that it's all over. And everybody is just consumed with fear. Now, what we've seen more recently, here's our May correction. Note how it's very, very hot in terms of the colors. Most of these people were fairly young buyers. They're people who accumulated during the bull. 3 months, 6 months, a couple of weeks. People who had accumulated very recently were flushed out at scale in May 2021. But notice how we're missing all of those blue colors and green colors. We didn't see long-term holders capitulate in May. And note that we've also not seen long-term holders capitulate at the moment. So most of the coins that were capitulated during the last week or month have been accumulated on the way down. We spoke about this in our bear market survival guide. These are people who bought the dip. Turns out that it wasn't the dip and there was more dips to come. We're seeing people who are essentially getting flushed out because they thought that it was time to get into the market, but it wasn't. It kept going lower and they are now being flushed out. Now, there's another thing to pay attention to. Do we still need to see that long-term holder capitulation? Do we need to see a November 2018 or a March 2020 complete flush out where there's maximum fear and maximum pain? It's possible. This is a risk that we need to keep in the back of our mind. It's absolutely possible that something like that can happen, especially with the given uncertainties in our current world. However, again, along with a lot of these metrics, we just haven't seen it yet. Now, even after a 50% correction, remember Bitcoin has gone through 85, 90% corrections in the past. This can happen. And as we saw in March 2020, it can be a very, very scary and big event. I was here for this. This really shook me. This was the scariest candle I have ever seen. Now, we may see that, but right now we just haven't. We're seeing people who bought the top and people who bought the correction thinking that the lows were in getting flushed out once again. So it's not quite the biggest correction, they're not quite the biggest capitulation we've seen, but it's also not insignificant. You can see it stands out versus all of the baseload daily noise. It looks more like these bear market sell-offs. So it's a very interesting dynamic. We haven't seen the resolve and the conviction of long-term holders shaken. That's a constructive sign, assuming that they stay in that state. They don't panic. If they don't panic, then they're going to continue to consume supply, and this builds a longer-term constructive view. If they do, however, start to panic, it can signal a bottom, but can also be accompanied with a very, very scary candle to the downside. So keep that in mind. Now, to close out, what we're going to look at is that long-term holder cohort. And I want to focus on two metrics. The first one is the illiquid supply. Now, this is in my workbench chart where I've looked at it as a percentage of the circulating supply. So the thing to note here, illiquid supply doesn't consider time. These are coins that get withdrawn to a wallet that has no or very little history of spending. So think about a dollar cost averaging hodler who just puts their coins straight into cold storage. They would be classified as illiquid and they start maturing from that point onwards. So the way that I like to think about a liquid supply, it doesn't necessarily encompass long-term holders, but it's our first sign that there might be long-term holders to be. They may become long-term holders. They're performing the actions on chain that you would expect of a hodler. So let's think about what this chart is telling us. At the December 2017 top, we saw a massive drawdown in illiquid supply. These are coins coming out of cold storage, up for sale, people exiting. Note that this bottomed at the bottom. This makes sense because the smart money suddenly see value down here at 3,000 and 4,000 and they start accumulating. Coins start getting pulled out of exchanges, going into investor wallets. And note 2019, we had this mini bull and a mini bear into March 2020. During this time, rather than being in this macro year-long downtrend in illiquid supply, people started kind of forming a bit of a base. People started putting coins into cold storage. Even though it's a bear, people are still panicking, but others are accumulating. So we saw a transition, a change. It really was a transitional period. Then March 2020 happened. And as we've seen in many of these metrics, a lot of things changed in March 2020. We saw Bitcoin enter the stage as a macro asset, and suddenly our illiquid supply started climbing. Now we had a hiccup here at 76% of the supply illiquid. This is when May 2020 happened. We had a major sell-off, and look at all of these coins that came flooding out of cold storage. This is a loss of conviction. It looks much like December 2017. People started selling their cold storage. They didn't care what price they got. Get me out. Now, from the lows, much the same as we saw back here in November 2018, we started to revert back to the upside. And note that even through the rally in all the way into September, October, November all-time highs, then a 50% correction, and then all of the chaos over the last month, we still see coins moving into cold storage. So it's showing us that the hodlers are more or less price insensitive at this point in time, and this aligns very closely with our active addresses and our active entities where it's only the hodlers that are left in this space. There's very few tourists in Bitcoin right now, and we're seeing the hodler class continuing to put those coins into cold storage. We've now broken above what we saw in May 2021, and we've actually now reversed all of the damage that was done, all of the inflows of coins. We now have as many coins in cold storage at the 2017 top, and this trend appears to be continuing. One we need to pay attention to, but certainly a constructive sign. Now to close on, and this is actually the metric of the week, and I think the realized HODL waves, they're an advanced metric, a tier 2 metric. They're one of my favorites. They provide so much insight by using the legend to look at different coin supplies. So what I like to do is typically look at young coins, and I consider them 3 months and less, and older coins, which are more than 3 months. Now what I've got shown here is our older coin supply. I've turned off all of the coins that are younger than 3 months. And what we can see is that we get this during bear markets in particular, an uptick in all of this supply. It swells, it gets larger. More and more investors are hanging onto their coins and their value is essentially maturing. And we've seen this break up to yet another high. So we're now at 72% of all of the realized cap, which is the stored USD value in Bitcoin, is older than 3 months. This looks like long-term holders starting to be. And see here, a lot of this uplift recently is actually driven by this orange band at the bottom, which is 3 to 6 month old coins. Now remember, long-term holders are 5 months, 155 days. So within this cohort, these are people who are almost long-term holders or have just crossed over. So it's kind of that transitionary period of people who are hanging on to their coins, and we're seeing this significant uptick. So this is overall quite constructive. It's showing that that hodler base exists. People who have high conviction in Bitcoin, they've hodled through some serious chaos. And what we're seeing is that strong resolve, even though there's macro headwinds and geopolitical risks as far as the eye can see. So it paints a constructive picture. The hodlers seem unfazed, and we're in the process of flushing out the final remaining top buyers. And it really does paint a fairly interesting divergence between those two cohorts. So thanks for tuning in, everyone. Hopefully you enjoyed this session. Please do give us a subscribe, a like, and a share down below. Let us know in the comments what you're really enjoying about this channel, what you want to see next. And do make sure to tune in for our Bear Market Survival Guide Part 2, which will be coming out on Friday. So just to really summarize, we're seeing a fairly strong divergence between our short and our long-term holders. People who bought the top are more or less completely flushed out at this point in time. That doesn't mean that they are all flushed out, but it certainly shows that there's been that capitulation in sentiment. Whereas our long-term holders appear relatively unfazed, and this is despite some serious macro and geopolitical headwinds. Now, with that said, do be extremely cautious. This is a very uncertain time. It is extremely hard to understand and know what's going on. And this is for everybody. You're not alone in this. I myself am still trying to fumble my way around and work out how this world works, how the markets are going to react, and where Bitcoin fits into all of this. And that's what I find interesting about on-chain data, is we can see what people elsewhere in the world, that hodler cohort and those short-term holder cohorts, how are they reacting? What is their sentiment? And what does it tell us about their behaviors? So it tries to give that insight so that you can see whether you are in fact aligned with what you're seeing in the data, or whether you're seeing a divergence between what you're thinking, what your current thesis is, and what the market is doing. So thanks for tuning in, everyone, and I look forward to seeing you on Friday. Cheers.